Good evening, everyone. Time for another silver update. Let's first look at the gold chart. We're getting back to the price where we were trading roughly August 10th or so. So we haven't really given back much. We've given back the huge blast off spike, but we're seeming to try to level off and create a support level around here, 1765 or so. We'll see how that takes care of itself. I've drawn a support line on the MACD down here, and you can see we've reset all the way back. Actually, the MACD is oversold down to 23.7, which means that we are oversold all the way down to the beginning of the year, which is a excellent reset, seeing as how the price back then was all the way around $1,350. Yes, we could correct back to this line. That is the long-term trend line, and yes, this support line was breached, although it may just be a brief dip below that line, so we'll have to wait and see. Silver is looking strong around the 40 area, so this dip was a pretty good chance for some of you to pick up some more physical. Of course, that's the name of the game, trying to stack on the dips, because obviously if you believe, as I believe, that silver is in a long-term bull market, it's going to go much higher. Wanted to share a story that someone shared with me. I don't remember if you recall the stories that popped up about Wynter Benton. It was covered for a while on Zero Hedge. Wynter Benton is supposedly this insider, or ex-JP Morgan insider. It's an interesting story that one of my listeners sent. Wynter Benton, central bank. Oh, and I wanted to point out, some have complained that they want to read along with me, so I haven't been using the scroll magnify function. If you take the videos, they're at 1080p. If you make them full screen, you should be able to read along with me. But when I'm reading, I'm going to go ahead and try to remember to increase this so that people are reading along can see. Wynter Benton, central bank announcement on accumulating silver as a reserve asset, imminent. While the silver community is divided as to the legitimacy of the Wynter Benton Group, ex-JP Morgan traders fired by Blythe in July of 2010, looking now to destroy JP Morgan using their own naked silver shorts, the latest Wynter Benton message posted today is such a dramatic game changer if true that we felt we must post it. The Wynter Benton Group alleges that a major sovereign central bank has been accumulating physical silver as a reserve asset and will soon publicly announce this fact. Confirmation of the remonetization of silver by central banks could well thrust a final dagger into the heart of the cartel. If true, the DOC $70 silver target for the end of 2011 may well end up being humorously low. Perhaps this explains silver's nearly $2.50 jump today to 41.27, and perhaps this could explain why China went from exporting 100 million ounces of silver year 2007 to importing 100 million ounces in 2010. Silver will soon be a reserve asset for a sovereign central bank. The leader wishes to inform his readers that a sovereign central bank will soon announce that it is accumulating silver as a reserve asset. Also, he's advising those who have participated so successfully in the latest gold run to shift their entire focus to the silver market. As to Jost Daly, the leader will give his reply at the appropriate moment. You're going home in a body bag, doo-dah, doo-dah. Now, that's an interesting rumor. The reason why I just have a hard time believing anything like that is simply because it doesn't fit with the size of the market. As I pointed out before, let's just say that we take 10 years of silver that's mined, and let's reduce industrial somehow, and let's just say we mine 1 billion a year, and we reduce the industrial and everyone else to only 50%. So let's say we get 500 million ounces a year that can go to investment demand, and we do that for 10 years. So that gives us 5 billion ounces So what's 5 billion ounces worth? At current prices, 5 billion ounces is only worth $200 billion. So if a central bank is accumulating physical silver, that must be a very small central bank, because it's just there's just not nearly there's not enough silver for Warren Buffett to buy silver. And I don't know if you remember that Warren Buffett supposedly bought 110 million ounces back in 1998, but there and Buffett supposedly just invested 5 billion in Bank of America. So if we just thought about $5 billion, $5 billion is going to be, at current prices, that's 100 million ounces. So 100 million ounces is going to take a big share of the investment silver available in the entire world, just with that $5 billion. And I'm going to address the issue of Buffett in a bit here. So I have a hard time believing in a market that's so small that even big investors can't get into it, that central banks are going to be getting into it. So we'll wait and see what happens with that rumor. Excuse me. The next story I want to look at is back to the Bank of America story, because I was so incensed because I made the call about Bank of America going bankrupt, and then Buffett stepped in with this ridiculous $5 billion. But anyway, Mike Krieger on Zero Hedge has written a story about this, and I'll read some of it. It's called "A Wolf in Sheep's Clothing," submitted by Mike Krieger, and we'll increase that as well. This really bothers me. You have to love that Warren Buffett, the richest man in the world, has deemed himself representative and ambassador for those making $250,000 and more. People like myself, he says. People that take home $250,000 a year before taxes are somehow in the category as the richest man in the world, in the same category. I would say there is a fairly large gap between $250,000 annual income and a $45 billion empire. And how did the powers that be arrive at this arbitrary yet significant figure of $250,000 as the line for dividing rich and poor? Warren, why not donate your money to the government that you feel so strongly should be funded with more money from the rich that you have appointed yourself a representative of? I'm beyond disgusted by these righteous, do as I say, not as I do folks that have already made a fortune and yet are lobbying for higher taxes as though they are elected representative for the government's definition of rich. Meanwhile, by and large, their wealth has already been made, and tax policy is immaterial to their incremental future wealth. If he feels so strongly about what people like him should be paying, what's stopping him? Pay more then, Warren, if it means so much to you. Nobody's stopping you, and the government will gladly accept a larger check from you on April 15th. Meanwhile, stop meddling in the business of people that are eons and light years away from you in wealth and are still working daily to achieve their own financial success and stability. And I'm not against paying more in taxes. I'm just against higher taxes as long as it's being funneled to the reckless, careless idiots in Washington, D.C. currently in charge of spending it. But that's subject for another conversation altogether, written by a friend of mine last November. A wolf in sheep's clothing. Anyone that has read these pieces for a while knows where I stand on Warren Buffett. Namely, I can't stand him. It has nothing to do with the fact that he has so much money. I'm not an envious person, and moreover, I think having wealth anywhere near his is more of a curse than a blessing. The reason I can't stand him is because he's a fraud. While he may have been a great investor at one point, he is more of a great actor than anything else. Here's one of the richest people in the world. He sits there in Nebraska chuckling, drinking his cherry coke, and eating hamburgers in this pathetically obvious attempt to convince the masses that he's just like us. The term wolf in sheep's clothing was invented for guys like this. Like most people out there, I I don't like bad guys. The trick, however, is that the most dangerous bad guys don't come out and tell you they are bad guys and how they're going to fleece you. What they do is pretend they're the good guys, pretend that they are on the side of the little guy or working for the collective good, which is a preposterous statement because there is no such thing. Human desires and notions of what is a good life are as varied as the stars in the sky. Once we start allowing officials or rich people to define collective good, you can be sure we're finished. And he goes on to talk about Thoreau, and a quote from Thoreau. I'll skip that. So back to Buffett. The truth of the matter is, as I and others have exposed this last several years, is that he essentially runs a financial services company. When the system itself was threatened, the status quo was threatened. Buffett stepped in and became a government agent once he saw the writing on the wall. He did not step up for America. He did not step up for the people. He stepped up for himself and his legacy. He stepped up to save the status quo because he is the status quo. All of this raises a very serious issue in America right now, and one that needs to be dealt with in the next crisis, which has arrived, or we will never be able to recover into the world's most vibrant and dynamic economy again. A lot of people lament the lack of upward mobility in the U.S. right now, and I share those sentiments. However, equally important is downward mobility. What makes the concept of America unique is not merely the concept that the poor can become rich, but that the rich can become poor. It is the second part that is most dangerous to social cohesion when it disappears. Unfortunately, the system that we have today of an unholy alliance between Wall Street, Washington, D.C., and multinational corporations, including the military-industrial complex, stands there holding on to all the levers of power to serve as gatekeepers of their own empires. I read an article on a related topic recently. It was called Central Planning and the Fall of the U.S. Empire. And he goes on to quote that. Once again, this brings us back to good old Uncle Warren. Have you noticed that Obama can't make a speech these days without saying Warren Buffett says this or Warren Buffett says that? I mean, give me a freaking break. It seems that Buffett has been named head of the U.S. economy, and basically Obama just picks up the phone and whatever Uncle Warren says goes, despite the fact that the guy has a huge stake in one thing and one thing only, preserving the status quo and preserving his legacy. The interesting thing about today is that I had intended to write this piece on Warren Buffett all week. It was just really fortuitous timing that this Bank of America news came out today. Gosh, where to start? First of all, this $5 billion preferred investment by Uncle Warren in preferred stock is extremely bearish for the stock market, the economy, and the financial system. This is not an investment, it is a political economic strategy. It tells us so many things that we probably already suspected. It tells us that Bank of America did indeed need capital. Even worse, they probably need so much that they went to Uncle Warren for 5 big ones so that people would just look the other way and gain confidence. This is how out to lunch these guys are. They don't understand that the root of lack of confidence is that the people see a country devolving into a banana republic led by greedy oligarchs and politicians stealing everything in sight as the ship sinks. So then they roll out the number of one crony capitalist in America, tell us he is investing in Bank of America, and expect that to lead to confidence. What a bunch of maniacs run this nation. This is 1789 France, folks, as I've said many times before. Second, the fact that the powers that be are resorting to Uncle Warren for everything now may mean the Fed is out of the game. No one has confidence in the Fed to come and save the day, so they need the next thing. That thing is Uncle Warren. Unfortunately, it's not working, and it's not going to work. You can see it in the market today. People are waking up. They're starting to see through the matrix. Buffett is a fraud and a shill. If you follow him, it will be right over a cliff. The baby boomer generation is getting old, and their ideas about how political systems and economies operate are getting even older. My generation is coming into its own, and we will determine our own destinies. You can step aside gracefully, or you can be pushed aside. Either way, your days of running the lives of this planet are numbered. The fourth turning is here. Peace and wisdom, Mike. Wow, great rant. Wanted to disagree a little bit with this last statement here about the $5 billion. Let's see, where is that? First of all, this $5 billion preferred investment. Anyway, just to address the issue of this bailout, I wanted to pull up a chart of the top banks in the world, because this is something that you don't ever really see listed in the media, and this is actually last year's information. And you got to remember, a lot of these books are fraudulent, so a lot of this data is false. But we're just going by market cap, so we're not going by excuse me, we're not going by what they say they have as assets over here in this column, because that's fraught with fraud. So we're not going to go by that. We're just going to go by the market cap of these banks and what the market says they're worth. Now, we can debate whether the markets are rigged as well, which I think they are, but at least this is probably a more accurate figure. Now, the first thing you want to note is the first of the top 10, 1, 2, 7, or 6, and 8 are in China. So number 1, 2, and 3 are not in the United States. The fourth is actually Wells Fargo. So now I'm going to make a guesstimate here that I actually think that these Chinese banks, I know a lot of people think the Chinese are cooking the books. Actually, just my opinion and my opinion only, I think the Chinese are much more honest than the Americans, and they're much more honest than the Europeans. I think the Chinese books are more likely to be much more accurate than the American books. That's just my opinion. You can take it or leave it. But anyway, so I think that based on that, probably, and the trade balance of trade and other factors, that these numbers are probably larger today than they were at this time. I'm at least going to leave them the same, but I'm going to check the American figures. So let's first go to Wells Fargo, and that's WFC, and you can see currently their market cap is $130 billion. So at $130 billion on this list, it actually drops them out of the top 10, assuming that any of these others come up. So number 4, that's gone. Number 3 is JP Morgan, and that's JPM, so let's check them. Their current market cap is $139 billion, so you can see they drop from number 5 down, possibly out of the top 10 as well. The next bank is Bank of China. Then we get Citigroup. Now Citigroup, I was surprised on this one. I'm surprised they're worth $87 billion. I thought they'd fallen a lot farther. They apparently have recovered since the government bailed them out. But obviously there's tremendous dilution in there as well, you can see, because these are in thousands. So their market cap is $87 billion, so that clearly throws them out of the top 10. The next one, China again, now we have Bank of America. Now, with Uncle Warren's little injection yesterday, we were around 63 billion, so you can see Uncle Warren's $5 billion added $13 billion on the market cap, but still $77 billion is the market cap, clearly out of the top 10, possibly out of the top 15, possibly even out of the top 20. So there's your U.S. banks, and you've got Goldman Sachs here. Let's put them in there. They're number 11. Let's see, and they're listed at $92 billion. So let's see what they are right now. And they're at $55 billion, so they've dropped significantly as well. So pretty much the top 10, it's a possibility that there aren't any U.S. banks in the top 10. So the top 10 right now could look something like China, the UK, China, Brazil, Spain, France, and Australia in the top 10. Now, another thing to note here that is really surprising, you've got this bank in Brazil here. You've got another bank in Brazil and another bank in Brazil on this chart. So that BRIC nation thing is nothing to sneeze at. You've also got a bank in Spain, which is worth more than most U.S. banks. Another thing of note is, except for HSBC, the United Kingdom is basically not on the list, except for way down here. There's Lloyd's and RBS. You've got some Canada. You've got Australia up here, the Commonwealth Bank. Another Australian bank here, Westpac, and another one, ANZ. And down here, National Bank of Australia. Here's another China down here. So the list is definitely dominated by China, and I think that's going to increase. Also of note is that Japan is not really a presence here. So anyway, the reason I brought up this list is obviously you can see by the market caps of these banks that $5 billion is nothing. U.S. banks, in my opinion, are already bankrupt, and it's just a matter of time until it comes out. But $5 billion injected into the $64 billion Bank of America to pump it up to $77 billion, and you can see that island reversal that we had right here, well, we're now coming back down to that. So I don't think we're out of the woods yet. The other big thing to note is the volume. I pointed that out the other day. If we look at the volume today, we put in a big number at 858. So is this going to be a rally from here? Possibly. I don't think so. I think we're going to turn around and go down. $5 billion just isn't enough. So I just wanted to do a little expose on that charade, because I think that it's just, frankly, it's just pathetic. I'm surprised that anybody's taken in by that. I think probably most people aren't taken in by that. So silver is still rising from the $39 bottom that it put in. Hopefully this is a short-term bottom. I guess for those of you who want to accumulate more, hopefully it goes lower. But we'll have to wait and see if the Wynter Benton story pans out, or if it has any merit whatsoever. Gold seems to be finding a bottom, and I think we're going to have some pretty dramatic news announcements in the next 3 weeks. And of course, tomorrow the big story is Jackson Hole. It's interesting to see the players set the stage beforehand, and we're going to wait and see what Bernanke says tomorrow, and we'll talk to you next time.